Ni hao ma. All right. Booyah! Hey, good morning. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders stationed around the world, watching the clock 24/7, eyes on the prize. It is Monday morning, and I was actually thinking about it earlier. I was like, what day is it? Oh, is it Monday? So even though it is Monday morning, I'm already about 18 hours into my week. Cool. Awesome. So great. We got a lot going on. So let's get on with it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, but never risk money. Get out of money lose. Hey, my name is Wayne. I've been trading a long time. Seen a lot of FOMC meetings over my years, almost 100 of them. The interesting thing is this is going to be a doozy, not because of what they say, probably for what they don't say, and that's going to freak everybody out. From what I'm hearing in the lexicon, in the zeitgeist of the market, what I hear is everyone's opinion on what the Fed should do. But how come they don't talk about what the Fed's been saying? That means more than half the people are wrong, in my opinion. Some people think 3 rate hikes, some say 4, some say more. But isn't it more important to try to figure out what the Fed is going to do, not what you think the Fed should do? There's a difference, right? So anyways, holy smokes, I think it's going to be interesting. So we got that going on this week, and there's a bunch of other things, but not nearly as important. Oh, well, Wayne, what about German PMI? Yeah, what about it? So anyways, what an interesting week it's going to be. And yeah, so let's do that together. So I invite you to subscribe to the community. I invite you to ask questions. And I invite you to visit tradersway.com to open up an account with a broker that will actually execute your trades into the interbanking system. Yeah, good swaps, good spreads, all that kind of stuff. Yeah, that's good. Fast execution speed. But the most important thing is trust and loyalty, and they've earned mine a long time ago. What about the Ukraine, says X-Trader? Well, it's a risk, but until it happens, don't worry about it. And if you are worried about it, buy the US dollar, buy the Japanese yen, buy the Swiss franc. Okay? And maybe buy some nat gas. So right now, dollar strong, yen strong. That's good. I bought some dollar yesterday. Great. By the way, let me ask you something. The stock market was in an all-time high not long ago. And I said, get ready. Right at the beginning of January, the stock market's going to come down 10 to 20%. And the dollar's going to be very strong. How did I do? NASDAQ is now down 14%. Hey, that's cool. Bitcoin has dropped 50%. Cool. Dollar's ripper strong, man. Nice. So how did I do? Come on, I'm an only child. Shower me with some love. Tell me, you did good, Wayne. Good job, Wayne. Very interesting times, to say the least. Yes. Thank you, Arve. Thank you. Thank you. Thank you. Arve, every day I think, how come Arve's not set up as my Norway portfolio manager, my Norwegian portfolio manager? How come we haven't got that set up? Every day I say, oh. All right, so let's start with commodities. La 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 pa 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 pa. It's weird. Oh wow, what is that? I got some weird EA running here, huh? What the hell is this? Swing trading dashboard. Looks like I was playing around with something. Whatever. All right, we'll leave it there for now. I don't know what the hell that is. We'll leave it there. Symbol euro dollar, 5-minute bearish 9 bars ago. All right. Interesting. Don't know what it is, so I can't explain it to you. Sorry. I must have done that a long time ago. All right, so what do we have now? One of the things I wanted to look at is bitty. Can't you see? The funny thing is, in the day trading group, I showed people last night that I bought it right here. And I said, I'll show you how confident I am. And I jam my stop right here. And I said, I'm so confident, I'm going to risk 45 cents. Actually, I was in like almost 2 mini lots. I don't know how much that was. But anyway, it's pretty funny, right? Arve's like, yeah, that's what I figured it was, right? Yeah. But you should at least be the analyst or something. You should, even if you're by yourself, once a day you should be posting as an analyst. Just get used to it, or be the associate where you're posting fundamental and technical stuff to yourself. But at least you're doing it, right? Just my thought. All right. So anyways, Biddy is dropping hard. And a lot of this, obviously, is dollar strength. Maybe, baby. Yeah, maybe, baby. Right? Oh, is that right? You like that? The no beard? Gone naked? Yeah. Yeah, thank you. All right, so anyways, check that out. Next number is 30 grand. Anyone going to buy it? Okay. And really, if you're going to tag this as an R1, this would be an S1. Which is about right. S1 is really about, what is that, 26,000? Okay. Interesting, right? So all last summer, I listened to people saying that this was going to go to 100,000. All right. I wonder if they still feel the same. I think about funds that are over leveraged and they're caught in this, or retail traders. I don't know. I don't know about retail traders, but anyone over leveraged and hell bent on this is going up, it's the future of the world, everything, this is definitely up forever. Those people tend to be crushed on retracements because they're over leveraged and they're right. And there's so much enthusiasm for the dream versus the reality, right? So one of the things we talk a lot in the swing trading group is this, you have this conviction for your bias, but you very quickly can break your conviction as soon as, for technical reasons. You're quick to walk away from it. Like, it's all right to be a bull, but you have to be really good at stop being a bull when the market is not performing bullishly, if that makes sense. And I look at this market, and I think many of the market participants are probably not that good at being a trader, and the professional ones too, right? The ones with putting millions of dollars into Bitcoin doesn't necessarily mean they're good at what they do. They just, right? So anyways, I look at this and like, maybe there was a trade here, which was a pretty decent trade. But I wonder what they're doing in this zone. Are they buying more on the way down? And when you're leveraged, you're losing big. Okay. And it's one of those situations where if you're going to survive moves like this, you got to be really good at walking away from the table from time to time. Right? So anyways, next shot, maybe 30, maybe 26. Amazing, right? So anyways, if you're trading this, I hope the best for you. I hope it's working out. I hope you're not getting crushed. Oh, I see what's happened. This must have been Ethereum at some point. Well, I want to play with this. So where do I put Ethereum? Well, let's talk about nat gas. This is one of the things that, Russia and the Ukraine. So I don't have a map, but imagine you have Russia and you got the Ukraine, and then you got this. So we'll call this Western Europe. We'll call this Eastern Europe. We'll call this the Ukraine, and we'll call this Russia. And the pipeline goes like this. Let's do it red. So a lot of what's going on with Ukraine, if you're not so sure, is that, the pipes have to go across this land. Okay? Now, of course, you can go to the sea and liquefy your nat gas and ship it somewhere else, but it's really what the pipelines are about. And there's a renegotiation of terms going on. And Russia started first by cutting these guys off. I think there's only 35% of the normal volume of nat gas going to Europe right now. Okay? And then Russia moves to the border here. And so there's a lot of renegotiations going on. And I think they're starting, right, with renegotiating with the Ukraine and all the other countries that go through here, like Poland maybe. And then finally you get here and renegotiating with that. So it's all, okay? It's all part of the negotiation, but how interesting, huh? Look at the price action. Crazy. And look at the look at the volatility, just amazing, right? You see the rate of change. This is basically one day. It moves more than a week, and then one day, and then the following day, all the way back around. Holy smokes. But here's another key takeaway that you might appreciate. Do natural gas traders use pivot points? Yep. Check that out. Amazing, huh? Pachow. So a lot's going on here. It's an interesting market. That's way more movement than usual. Okay. And it has formed, if you want to look at it from a higher time frame. Okay. 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 So anyways, it's just interesting times. This is what they're fighting over. Okay. Now, technical analysis, watch this. No, 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 no. Oh, so that's kind of right out of our price action training course. Yeah, that's a plug. Yeah, if you don't know how to trade price action, then you're I think you're actually doomed if you don't know price action. So anyways, so that's right out of the price action course, which is kind of interesting, kind of nice. So Bitcoin down, that down, and we look at gas. Now let's look at oil, crude, petroleum. And oh my God, look at that. Nice. Okay. So we noticed this. Brent was doing exactly the same. So we said out. Okay. There's your double top. Okay. Double top. Here's your lower low. Here's your lower high. Okay. We call that a 1, 2, 3. And on our way down to the 200 EMA. But I drew this out for you Thursday of last week. This might have been the swing trading group where I did this. Okay. Up, 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 down, down, buy, up, 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 down, down, buy, right? Up, 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 down, down, buy. Oh no. Okay. And now we're in this mode, at least for now. Okay. Interesting, right? So here you are Thursday of last week, and now the move is actually well on its way. Would have been nice to know it. Yeah, Chris, that's when yeah. Oh, you mean I did it here as well as the swing trading group? Okay. Yeah. Well, the nice thing is I drew it out for you just to, I don't know, double emphasize what I'm talking about. And I apologize, I can't do a big long stream today. I'm making a donation to charity and people are coming over to the house. So anyways, I need to roll out of here a little bit earlier than normal. The weather is finally beautiful again. It's a perfectly clear sunny day. Not a cloud in the sky. The sky is right now sort of pink and blue. And the herons and the egrets and the geese and the ducks and the cormorants and the coots, and they're all swimming around. Everything's good, but there's ice in the hot tub. Hey, Adam, when was the last time you found ice in the hot tub? Every time Adam comes in, it's hot. It's dusty. It's bright. Sunglasses on top of the sunglasses. Anyways, yeah. Calm before the storm. No, it actually felt like today, honestly, I was thinking about it during my walk. I walk in the morning. That this feels like today is a turning point where it's not dark when I do my walk. The sun is now up, and but everything is calm. There was nothing moved. There was no breeze. The trees are barren. Everything is still, everything's quiet, but it feels like every day now the trees will be waking up. Why don't I reply to my emails? I'm a bad person. So what's up, Sohail? Let's do some exotics. And all the things you do. Yeah, I noticed that, Meta. Your $5 gets more than 1 minute, right? You get days out of it. It's cool. Thank you. It goes into the Cohiba Fund. Or maybe the my Cuban Farm Fund. Yep. What's up, Sohail? How can we help? Okay. Take a look at Mexican peso. That's weekly, by the way. So maybe we should reintroduce. We can reintroduce at some point maybe MACD and stochastics. I notice a few people are asking questions about them again. I used to use them all the time. Like this would be my standard setup. I always traded this way. When I look at this chart, it's like a familiar friend. But over the years, I learned to see MACD and I learned to see stochastics. So I noticed I was getting them out of the way more and more because I wanted to see the candles more, and then I ended up just getting rid of them. But you should be able to understand how to use these tools, and then you could analyze them or add them when you think you need them. Okay. So anyways, taking a look at peso, I want to change the template. Okay. And I'm kind of interested in these prices right now. And it may play out a bit of a range for a little bit. And you'll say, well, dollar's really strong against this right now. Yeah, but this is FOMC week in which we're trying to figure out whether they're going to jack up interest rates 2 times, 3 times, or 4 times this year. That's a big deal. We're trying to work that out. What I'm more interested in is where are we going to be in 2 months? Or how about next month? And what I would like, what I'm mentally setting up, and pretty soon, I don't know about physically, but tactically setting up, is something like this. This is what I think the near future will be. Okay. If you're watching the ticker tape at the bottom of the screen, you'll see Indonesia is thinking about raising interest rates soon. Huh? How nice. Yes. The only thing is I haven't really tested it, nor have I released it. But it's one of these things. I just got to sit down and do it, and that's the problem. Oh, well, yeah. The problem is they use different math and methodology, but that's been updated so that they're the same. So I got to test it and release it, and I think we only have it for either MT4 or MT5, so we need to test it and confirm that they're the way we want. But one of them had to basically be reprogrammed completely new code kind of thing so that they match. And then we have to do it for the other platform. But yeah, it's coming out. Yeah, just one more thing about the Ukraine. Look, unless there's like tanks rolling in, keep an eye on the situation, but don't worry about it. But if you are worried about it, you want to buy dollar, buy yen, and probably Swiss franc, okay? If you are. Now, I'm doing that now, but not because I'm worried about Russia, because I'm supposed to, okay? Okay? I told you guys 6 months ago I'd be buying dollar. It's still, now, I'm not wholehearted, like, I'm not buying as much dollar as you would have thought, because it's sort of like my short-term short versus long-term long. Well, right now I'm short-term long and long-term short. So it's sort of half-heartedly, I'm mostly waiting. Okay? I'm mostly waiting. All right, let's take a look at exotics. And I'm really enthusiastic in 2022 about emerging markets. Okay? And the return of the carry trade. So I'm quite interested in what's happening in the moment. Now, we have to ask ourselves, like Rand, for example. Is Rand behaving? Well, it double topped, logically, just slightly above the price you would have assumed. But nonetheless, things were going on at that time. Omicron was the big one, so dollar got crazy strong. But then kind of got into its pattern. Double top, lower low. Love it. 1, double top. 2, lower low. 3, lower high. And where should that occur? In this zone here. Let me change the colors. Okay. In this zone here. That's what it says in the training course anyways. Okay. So you get the 1, 2, 3 in the right price zone. Cool. Okay. Lower low. Lower high / roll reversal. So it's beautiful price action. Off the monthly pivot, off the roll reversal. Everything's golden. Off the moving averages. And then the extreme or aggressive target for the month now is this line here at 15.13. And basically what it says is stop selling or take profit, because that's the best price you can reasonably expect. Okay? All this is just wonderful, isn't it? Okay, great. And what has occurred pretty close to that price? Some sort of big reaction. So now what I'm kind of thinking is you get sort of a big move this week because of FOMC. And then maybe, just maybe, ideally, I'm taking this around again. Emmanuel says, you told us 6 months ago you would sell the dollar. Not, you can go back. I'm not afraid of this because, right? Not in January. I've said it more than 100 times. Maybe even more than 200 times. Okay? In the beginning, like, how about like this? Early January. Okay, buy dollar. Okay? Not once. I didn't kind of casually reference it once and now I'm bringing it back to life. If you listened to me 5 years ago, I would have said it. Okay? How many people can back me up on that? That clear as day, This year, last year, the year before that, in the first early days of January, I want to buy the US dollar. And I'll probably do it again next year. Yeah. Now, Adam, for example, I've known, I don't know, how long has it been Adam now? 10 years? Okay. I don't know. He would have heard it back in the day. Jim, I've known 15 years, maybe more than that. Okay. Now, I've known Jim so long that I probably didn't talk about seasonality because I probably didn't understand it. Yeah. Oh, it's been 15 years for you too, Adam? That's amazing, huh? How awesome. I apologize that I've never come to visit. It's on my to-do list. I mean, COVID's really messed things up. I keep thinking like, I'm going to jump on a plane and go to Singapore right now. Oh, shit. COVID. Oh, I want to go to the Caribbean. I do this all the time. I'm like, dude, I need to go to the Caribbean. And then all of a sudden, oh, man, what? Okay. But the bottom line, guys, is that's what seasonality is. I don't know what's going to happen, but I'll give you another example. I've been hoarding some cash over the course of, I think, about 4 months. 4 months. I've been putting cash aside. Okay. Waiting over 4 months, saving more and more cash to buy the stock, right? Stocks in the third week of January, which is now. So I started deploying this cash. I bought a stock, I think it was about Thursday. I bought a stock last week, and the next day I made 2%. In the first day of trading, I was up 2%. Right? Yeah, well, King, this is a tough gig. And the trick is when I say the dollar's going to get strong on a particular month, we don't know, will it be strong for 3 days or 3 weeks? And on the first day, on the 7th day, right? On the 14th day, what day does it kick in? Well, we don't know that either. This year, we had an out of position trade into a counter trend trade, and it worked textbook, straight out of the training course. Right? I teach you an OOP to CT, right? To CPP trade. It's in the training course specifically. And that's what happened. It went up and then it crashed. Okay, well, every year is slightly different. Okay. Yeah. So Matrix had a question with peso. Yeah. 2050 would have been a reasonable place for sure. Okay. That would be a setting like this. Okay. The issue is there hasn't been an entry. So even if I wanted to, there hasn't been an entry. Like, that's it. All I can say is there hasn't been an entry. So even if I wanted that, that should also tell you that I might like it at 21 as well. Okay. Now, I hope it doesn't go there. So there's strategy. Okay, Matrix? And this goes to everybody because this is what I'm talking about. Like, I know what I want to do in January, but I don't know what January is going to do. You understand that? Let me say it again. I know what I want to do in January, but I don't know what January will do. I want to sell the USD Mexican peso a lot. I love it. I love selling this pair. I'm very enthusiastic about selling this pair. This year, next year, and the year after. Okay? So now I have to say, well, at what price and at what time? So the strategy is done. I know I want to buy peso. The strategy is done, and that's based on fundamentals. And I can go through that, but I'm not going to. Okay? Just who cares what my opinion is or what my conclusion is? You can get your own conclusion. So I want this down. Great. Awesome. Do I sell now? Do I sell now? I'm just like that cell phone guy in the TV commercial. Do I sell now? Do I sell now? Well, no, I don't sell now. There's no entry. Okay? So the first part of tactics now is defining what price might be the price. It's kind of like clearing Fallujah when the Americans went in. Okay? You kind of want to know what doors to kick down. Okay? Probably a terrible analogy, so I apologize for it. But you got to know which doors to kick down. What price? What price do you want? So I start with that process. And sometimes it's really simple, Matrix, like the midpoint cycle level, 2050. The next one would be 21. Would I sell it at 21? Well, maybe, and depends, but that's a nice psychological level. But the next part of it, if that's the price, but what time then do you sell it? Well, if you get to 2050 and then you spot a reversal pattern on a small time frame, you take the shot. So we got to 2050, there was no reversal pattern, there was no shot. The price action didn't change, no pattern presented itself. And what technical analysis showed us is that there were no sellers at that price. So you're like, well, maybe the next level. Right? Thank you, Emil. That's actually quite funny. Okay? Right? So that's that. So I have this gray area, which is a dynamic price level right now. Okay? And it's based on what I think is going to happen next month. And, well, we got a lot of time to go. And, of course, the Fed meeting coming up could change everything. So, I'm waiting. But it's not surprising that the dollar's strong going into the Fed meeting. What's the risk? Okay? Is there, let me tell you something. Let me ask you a question. The FOMC meeting coming up is leading the market to uncertainty. Okay, I didn't spell that right. I apologize. Okay, but anyways, FOMC meeting is leading to uncertainty. We don't know what they're going to announce, what words they're going to add to their statement, what words they're going to remove from their statement. We don't know when they're going to raise interest rates. We don't know how many interest rates they're going to raise. We don't know when they're going to start balance sheet reductions, in particular mortgage-backed securities. And because of this, we all have our opinions and they all stink, which leads to the market being uncertain. Some people say 4 hikes, some people say 2 hikes. It's crazy, which means a lot of people are wrong. So what do you do in the times of uncertainty? Add risk? What the heck? course not. That would be ridiculous. It's the dumbest thing ever. Oh, this means risk off. Of course it means risk off. But once we figure things out and we're a little more certain, for example, Wednesday comes out, we get the release, we don't learn too much, then we do the press conference and we learn more, and the market decides there's going to be 3 hikes, not 4, not 2. They're going to raise in March, June, and D's, for example. Let's say that the most of the market cuts out 4. I don't know if this is true. I'm just giving you an example. We go through FOMC and the market concludes by what they heard directly from Jay Powell that there's only going to be 3, and that he actually says he thinks, July they're going to start the balance sheet reduction because taper will be done. So end taper, all that kind of stuff, whatever. Okay. So now let's say 3 rate hikes. Let's say 90% of the market agrees. Some still say 4, some still say 2, but let's say 90% of us agree. Us meaning market participants. Okay, game on. Okay, how many people in the market make money by not taking risk? None. So it's game on, boy. Risk on. Game on, risk on. Get your risk on, boy. Okay, which means boom. Cool. Well, that's why I'm sitting on cash and I'm waiting my time. Okay? And the cool thing is then if we're quite certain they're going to raise in March, then we won't be shocked in March when they raise. And this trend now can last all the way to summertime. Oh my God. Okay. So if I'm like, dude, I want to sell USD Mexican peso. And you're like, dude, you didn't tell me, you said you were going to sell it there. Dude, I'll tell you what, I want to sell this for 3 years. Okay. So if I didn't sell it yesterday because I didn't get an entry, doesn't mean I'm wrong. Okay. It just means I'm pretty smart for a supermodel. I mean, not smart to a regular person, but for someone as beautiful, I got it going on. Okay, I'm waiting my turn. And if I'm going to sell this for 3 years, can't I wait for okay? Yeah, well then I'm going to sell the lower high. Chow. Okay, game on. Sell it and sell it again and sell it again and sell it again. Okay, it's going to be great. Okay. Merci, Lago, where we go, it's pronto. Okay, anyways. What time is it? I got to be careful. I got my meeting coming up. I can do one more. Let's do something else. Let's move. So yeah, I'm a big high yield fan. I'm a big commodity fan. I think commodities are going to be stable but high, which means reasonable support for those. Okay. And I'm waiting for more and more data to come out of China. Truly beautiful with a good soul. I couldn't have said it better. Thanks, Sean. All right. I wish I could get that on my license plate. All right. Pig Dog, we're hitting weekly targets. Okay, let's explain this one. OOP. Okay, is this a valid CT? The answer is yes, baby. Yes. So let's see. Be interesting. Yeah, could be interesting. At least stabilize. Okay. Okay. But remember, I'm not necessarily interested in this because of technical reasons. So I got to wait for the risk event. And of course, the risk event is out here. Okay? So you got to wait for that. But isn't that nice? Isn't that lovely? Amazing, huh? Merci. La go. Where we go, it's pronto. Yeah. I like that song because I got a giant subwoofer at the back of the Porsche, and the whole the whole world shakes like an earthquake on that song. Whoop whoop. Oh God. All right. This would be something that I would look for, but you can see how trendy we are right now, huh? But the thing that's changed is the Bank of England is raising interest rates. So you'd say, well, technically, Wayne, that's kind of stupid. And I'm like, well, I don't know about stupid, but you're like, well, look, if it ain't stupid, it's at least one standard deviation above the mean. Okay? Standard deviation above the mean, but that's not mean, so above the average, I guess. And y equals mx plus b, where m equals rise over run, which is equal to, or let's do it this way, less than 0. Therefore, it's technically bearish. It's true. That's why I use tools. You might be looking at this red zone, but if you're looking at this red zone right here, no. This tells us tells bulls to get out. That's what it says. Oh, plus it's one standard deviation above the mean. Okay, good. So take profit. Great. So that's technical. But we already knew all that jazz. So what's the next move? Well, that would be fundamental and maybe seasonal. So I have this theory of it's either going to do this or it's going to do this. Okay, so I can buy it down here around that price, or I can buy it around here around 35. I think it's 35. No, 34. Cool. Is that going to happen? I don't know. But I have a strategy. So I'll tell you what. I don't know. Is it going to go up down there? I don't know. How would I know? Okay. So what I'll have to do then, not on a daily chart, but it seems like around Wednesday we'll be at this price. And on a smaller time frame, like a 15-minute or an hour, I want to observe this. Okay? And if I get something to that effect, I'm long and I'm gone, and I'm down to get my pippin on. I'm just gone for the entire month. My target will be up here. And by the way, the month after that, dollar's going to get strong again. Just like it did this month. It'll go from weak to strong. It'll do that for 2.5 weeks. And then I'm selling dollar again like crazy. Or at least so I think. Or at least so I will plan and strategize. And then, of course, if I get anything remotely like that, fire for effect. See, I don't walk into every trading day treating every day the same. Nor do I trade every pair the same. I behave differently every month and every quarter. I change my behavior based on central banking policy. Okay? And I make decisions fundamentally, but I also look at global macro, which means how do the fundamentals of this economy fit with the fundamentals of the other economies around the world. So I have to pay attention to China, not just the United States, as an example. And guess what? And I'm going to end with this because I got to go. When the Fed, let me do this in a different color. When the Fed raises rates, okay, they're going to do it two different ways right now. Fed funds rate, which is just usually called the interest rate, but there's all kinds of different interest rates. That's the Fed funds rate. Okay, and they're going to raise mortgage rates, let's say. Now, the Fed it's not law. The Fed doesn't just say, this is the new interest rate. They actually go into the market. They call it open market operations. And they participate in the market just like any other market participants. They go in, and to raise the Fed funds rate, they will have to sell. Let me say it again. To raise interest rates, the Fed will have to sell short-term bonds. They're sellers. They'll crash the market, so price will fall, but yield will rise. Therefore, raising interest rates. Now, when they sell, okay, what happens? You got bond buyers and Fed seller. Okay? So what'll happen is cash will leave the bond buyer and go to the Fed, and the bond will leave the Fed's balance sheet and go to the buyer. The buyer now has the bond on the balance sheet, but they gave up cash. Fed sits on the cash. And the cash is not in the system. It's not in the economy anymore. Did you hear that? Right? You get it? So the Fed comes in, raises interest rates by selling bonds. Bond buyers buy the bonds because that's what bond buyers do. And they'll get a good deal from the Fed, so they'll definitely do it. And then the Fed gets the cash, and then now the cash is not in the economy. Now they're going to do the same thing here. They're going to sell mortgage-backed securities to Fannie Mae and Freddie Mac. Okay? They will give the money to the Fed. The Fed will give the mortgages to the government-sponsored entities, GSEs, and then the Fed will sit on the cash. Cash will come out of the market on the short end of the yield curve and on the long end of the yield curve, the 30-day and the 30-year. So, what will that do to the dollar? You think it'll strengthen the dollar? Less supply, price goes up, right? Well, that would be the case if the Fed was the problem. See, the Fed could add money to the economy when it wants to, and then when there's too much inflation, they can remove the money from the economy, and we have steady growth. Okay? Now, the United States has not had inflation for 40 years. Not even after the 2008 financial crisis when the Fed pumped in a whole bunch of money, because then they sucked it out again. But the federal government didn't get involved, so we didn't have a problem. Now, the federal government has literally printed, or in this case borrowed, so I should say borrowed, but they borrowed the money and increased the money supply through borrowing, and we borrowed let me emphasize this, $5 trillion. $5 trillion. Now, let me ask you something. If the Fed could simply go in and sell a bunch of bonds and reduce the money in the money supply to lower inflation, what is the federal government going to do, since it's the one that pumped $5 trillion in the market? If the Fed can clean up its mess pretty easily, what's the federal government going to do to solve that problem? Where did the inflation come from? The federal government, not the Fed. Don't hate the Fed. The Fed's the only reason we're not cavemen right now. $5 trillion came from the federal government, not from the central bank, and they can't take it back. Okay? The head of Bank of America said that most people that had less than $5,000 in their bank account before getting free money no longer have it, and 40% of that went to food and beverage. Okay? So about let's say 2 trillion out of this 5 trillion might have gone to bars and strip clubs and Applebee's maybe, except Applebee's was closed. Like, oh my God, that money is gone. Some people bought TVs. Some people bought AMC or GameStop. Okay, but what happened when they lost all the money? Did you guys notice Robinhood? Yeah, those accounts blew up. They lost all the money. You gave a bunch of people free money. They gambled it, and it's gone. Robinhood stock price is down. Like, users are down. Money is down. Trading volume's down. Why? All the idiots lost their money, or they're all millionaires now. Okay, which means it'll take them longer to lose their money. But the issue is that 5 trillion is where our inflation is going to come from. But Brinsley, the point is that money is now in the system, but it's not supposed to. It's abnormal, unnatural money. Okay? The United States added $5 trillion to its credit card. And what did it put on the credit card? Burritos, beer, chips, a weekend in Vegas, a 4K TV, and there's zero productivity and zero return on investment. So that unnatural money is going to stay in the economy. And therefore, USD down. Despite interest rates going up on the 30-day and rates going up on the 30-year, okay, the dollar's still going to be weak because of that. So my thought is mortgage rates are going to go up. That'll force buyers to buy houses. They'll have to buy it now. Otherwise, if they wait 6 months or a year, it's going to cost them 0.5%. If they wait 6 months, so they got to buy it now. So I'm going to look at Home Depot and Lowe's today. I think they're down about 15%. And I'm thinking over the next 3 years, mortgage rates are going to go up. Home buyers are going to buy new homes because they got their jobs. They feel comfortable that we got through Omicron. And rates are going up. So if you're going to buy, you got to buy now. They're going to buy a bunch of houses, and then they're going to have to go to Home Depot. Now, you might not feel comfortable shopping at Neiman Marcus, or maybe there's no reason to go buy a suit at a department store anymore. You just get it made online. But you're going to have to go to Home Depot. And if you hire someone to fix up that new house you just bought and they're going to do the renovations, they're going to go to Home Depot 3 times a day. They're going to buy spray foam and nails and that little doohickey thing right? So maybe I'll do that. Why? I'm thinking 3 years ahead because I'm a genius. Well, for a supermodel. So peace on earth. May the pips be with you. May your profits be above average. I'll see you later if you're in my day trading group. And if you're not, well, then I will see you in the morning. If you want to join my day trading group, fxbootcamp.com. It starts at $88 per year. $88. You spend more you spend more money on coffee than that. You spend more money on burritos than that. Okay? Okay? Yeah. Usually when I used to sign up for classes at Harvard, I would spend probably $800 on textbooks per class. So $88 a year. Get on board, son. Let's go. Cheers.